day everyone, this is your European Open briefing for Wednesday, October the 19th. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So the main news today is Chinese data. In particular, we've had GDP growth data for the third quarter. So the Chinese economy grew as expected by 6.7% year on year. We also had some other data on China with retail sales and industrial output. So all of them were pretty much in line with expectations. So although there was nothing terribly exciting about today's data, there was relief in the markets that they didn't disappoint, which is a sign that China's economy is stabilizing, and this boosted risk sentiment in Asian markets. The dollar is slightly off from yesterday's close. This was mainly following inflation data for the month of September, which was in line with expectations, although underlying inflation was a little bit weaker than what analysts had been expecting. The pound, we saw a bit of a jump yesterday in the pound. This came after stronger than expected inflation data, and there's also been some reports that Parliament will have a say on the final Brexit deal. In commodities, we've seen oil moving higher today following another drawdown in US inventories, as well as the Chinese data. So this has boosted risk sentiment, and this is also helping commodity currencies. So let's have a closer look at the Chinese data. We can see here that GDP is up 6.7% year on year in the third quarter. It's up 1.8% quarter on quarter, both of which are in line with expectations. We also had retail sales data that's up 10.7%, slightly stronger than expectations of 10.6%. Urban investment, which is a good indicator of business spending in China, that's up 8.2% from January to September period compared to the same period in 2015. That's as expected, but the main disappointment was the industrial output, which came in at 6.1% versus expectations of 6.4%. But overall, it's pretty much what had been anticipated by the markets. We can see in more detail at the GDP data that Chinese economy is continuing to transition away from an investment and export-led economy to a consumer-led one. Consumption accounted for 71% of China's GDP in the first 9 months of 2016. This is up from 66% in 2015. So we can see that as exports continue to decline, personal consumption makes up for a larger proportion of China's economy. Now, despite the data showing signs of stabilization, there are concerns, though, that there's too much reliance on rapid credit growth, government spending, and the property boom to drive growth in China. We can see here that property investment was up 7.8%. Private investment, on the other hand, which is driven by private businesses, private manufacturers, that continues to remain weak. If you look at the Chinese currency, it's slightly firmer today, below 6.74 per dollar. Yesterday, it reached a fresh 6-year low of 6.7410 per dollar. So not much reaction in terms of the yuan to the data, but overall Chinese data has helped risk appetite in today's trading. The dollar, on the other hand, was slightly hurt by inflation data for the US yesterday. US inflation rose to 1.5% in September. This was This was in line with expectations, though core inflation was 2.2% versus expectations of 2.3%. The dollar hit a one-week low of 103.55 yen earlier in Asian trading today. And the slight disappointment in underlying inflation has lowered the odds of a December rate hike slightly, prior to the data, expectations were at 70%, and they've currently dipped to around 65%. And that's the main reason why the dollar is a little bit softer on Wednesday. If we look at sterling, we can see here that sterling reached a 1-week high, $1.2324. It's since eased a little bit. It's slightly below $1.23. We also had UK inflation coming in at strong at a two-year high of 1% versus expectations of 0.9% in September. Core inflation was also slightly stronger. This has raised doubts about the Bank of England's ability to cut rates or expand its stimulus program further should inflation continue to overshoot the expectations. And that was one of the factors that helped drive up the pound yesterday, although there were also some reports that after UK government lawyer said that the government will probably have to have MPs vote in Parliament to approve the final Brexit deal. This is seen as a positive for sterling because MPs in the UK Parliament are more likely to opt for a light Brexit as opposed to a hard Brexit, and that's seen as a boost for the sterling, although today it's off yesterday's highs. But if we get sort of further clarification or for further confirmation of that, we might see more gains for the pound. If we have a quick look at the commodities and commodity currencies, we can see oil, US crude, is up $50 a barrel. It was boosted yesterday from the American Petroleum Institute data. This is the unofficial oil inventories data for the US that pointed to a drawdown in US crude stocks, which were down 3.8 million in the week ending October 14 versus expectations that it would rise by 2.7 million. So that's boosted oil prices today, and coming up later in the day we have the EIA inventories data. That's the official data from the US Department of Energy. If you look at gold is also up since Monday's lows, although it's fairly steady today compared to late yesterday. It's around $1,261 an ounce. Looking at the antipodian pairs, we've got the Australian dollar not too far off from yesterday's highs. It's currently trading around 0.7660. The New Zealand dollar is also doing well. The Kiwi was helped by an increase in dairy prices in yesterday's bi-weekly auction, where dairy prices went up by 1.4%. Dairy products are New Zealand's main export, so any increase in dairy prices is positive for the New Zealand dollar. Now looking at today's economic calendar, we can see the Chinese data here early in the day. Coming up shortly, we have UK unemployment data. The jobless rate in the UK is expected to hold at 4.9% in the 3 months to August. And we'll also expect to see average earnings also steady in August. In the US, the main data is going to be housing data. We've got building permits and housing starts. And we also have a Bank of Canada policy meeting. The Bank of Canada is expected to hold rates at 0.5% at today's meeting. And then after that, we've got the weekly US inventories. That's it from me today. Thank you very much for watching and have a great day.